Hello everyone, welcome to today's US Open live webinar. It is Thursday, December 15th, 14:20 GMT, 10 minutes before the opening of Wall Street. This is your host, Nikos Zabouras, Senior Market Specialist at FXCM. And this will be the last session of the year. We will return with the next year. Now, of course, this has been a very exciting, eventful and highly consequential mostly because we had three major central banks delivering the latest monetary policy decisions, all three of which the Fed yesterday, the Bank of England today, and the European Central Bank also today delivered the 50 basis points hike each, slowing the pace of tightening, but the ECB and the Fed definitely were very hawkish. Now, before we go on and discuss all of that, along with some other things, because we had many more news, please read carefully through the disclaimers, and then we will get the ball rolling. Once again, please read carefully the disclaimers and the risk warnings. Okay, so let's go ahead and start because we have lot of things to cover. We see the Euro USD here. So the latest decision was from the European Central Bank today. Very hawkish, despite the downshift. We will get into more details in a little bit. Let's get the overview first. Now, Miss Lagarde, the ECB president, still speaks. She has been going on for like half an hour now and has gotten over a few of the questions from journalists. So things are still ongoing, and we'll have an eye around any more developments, but the common currency strengthens after the decision and during the press conference. Now, other than the three major central banks, we got an upside surprise from New Zealand's GDP as the economy grew by 6.4% year over year in Q3. That's from earlier today. Just a little earlier, poor data from the United States around retail sales, which dropped in November by 0.6%. That's a big drop given that it's also the holiday season, the start of the holiday season. We also had many news and developments around oil since we had the monthly reports from OPEC and the International Energy Agency, and we had quite a few things going on the corporate world as well. Most notably, Elon Musk, the CEO of Tesla, sold another 22 million stocks of the EV firm after last month's nearly 22 million again stocks, as there are fears about his involvement with Twitter and how this reflects badly on Tesla. Now, in other news, since our last session on Tuesday, Delta Airlines upgraded its 2023 forecast and expects earnings to nearly double year over year, while rival United Airlines placed a huge orders for 100 Boeing 787 Dreamliners with an option to purchase 100 more. That's definitely big news for United and definitely big news for Boeing, which has been troubled and has been behind European rival Airbus for quite a while now. Okay, so let's go ahead and start with Euro USD. And as we look at the chart, we'll go over the decisions. We have already written about the decision by the Fed on the respective FXCM websites. Now, it came under pressure initially today as the Fed was very hawkish. Again, it hiked by 50 basis points less than this marked a slowdown compared to the previous larger moves. but it was very hawkish. It signaled more tightening and also raised the terminal rate to 5.1%, the median terminal rate, which implies another 75 basis points worth of hikes. And that's actually higher than market expectations. Now, today, however, we had the ECB just earlier with 50 basis points as well, also marking a downshift. But the pair actually pushes into positive territory because the ECB was very hawkish, the European Central Bank. It believes that rates will still have to rise significantly at a steady pace. And that's quite a significant statement and quite clear, probably. And President Lagarde was asked at the first question during the press conference what this means, if it means 50 basis points, and it said more 50 basis points. Now, again, this is how we get the news and how we react. But what it looks to me that probably implies more than one adjustment of this size. And as a result, as you can see here, Euro USD jumps. You can see here, this is the move on this news. It also announced a quantitative tightening to start in March and upgraded its inflation projections for this year and the next, and also expects the euro area economy may contract in the current quarter and the next quarter, and this is verbatim from the press release. So now of course, the technical outlook is sort of on the background as the fundamentals drive the movements, and as Ms. Lagarde still talks, there is room for volatility. In any case, Euro USD is constructive above the 38.2% Fibonacci of the 2021 high, 2022 low drop, and now has the ability to push for the 1.0787 resistance, but further progress may prove elusive in the near term. Now, a pullback would not be unreasonable, as from purely technical perspective, the move seems a bit stretched. But some catalyst will be required for sub 1.05 moves, and it seems that there is a high bar for further decline towards the 200 period EMA at around mid 103s. Bias is on the upside, and the first look at both the Fed and the ECB looks like they're both on a hawkish path, and as such, there is no differential there to actually work against Euro USD at this stage, at least significantly so. Of course, we'll need to assess the data in more detail, especially from the ECB, because they were just out and President Lagarde still speaks. Now, that's it for Euro USD. Again, caution is needed. Now, let's go over to GBP USD. Similar pressure in the aftermath of the Fed did not react much to the Bank of England hike. Now, again, as we said, 50 basis points hikes again. This also marks a downshift from the previous historic 0.75% move. Guidance again murky. The bank said that further increases may be required in the rate, but at the same time, officials stressed that they will respond forcefully if inflationary pressures persist. Now, the interesting thing here is probably the most dovish part of the whole thing, is that there were 3 dissenters, typical division for the BOE, but 2 of them actually opted for a pause, for no change in hikes. That is quite important. We had in Tuesday sessions talked about of such a possibility of some officials, 1 or more, to actually vote for no change, and this actually happened. Now, on the technical part, GBP/USD is vulnerable to downside pressure, given that the Fed is more hawkish than the BOE. It is vulnerable to this region here, 1.2130, 1.2052, but further decline that will breach the next confluence of supports here has a high degree of difficulty at this stage. Bulls remain in control after the 6-month highs earlier, but although we can see further advance and taking out 1.25, bulls don't inspire confidence at this stage for further advance towards and beyond 1.2665. Now that's it for GBP/USD and EUR/USD. I want to move to US oil because, as we said, we had quite a few developments there. So these developments were around the oil reports from key organizations. Now, US oil posts a 3-day relief, which pauses today. It faces pressures, and that came after the soft US CPI report on Tuesday and optimism around demand, which was fueled by the fact that OPEC kept its 2023 demand growth projections unchanged after a series of downgrades, whereas the International Energy Agency actually raised its projections for growth demand in 2023. Meanwhile, the Keystone Pipeline, we had talked about it earlier, had shut down last week, now has partially reopened, but partially. Now, in our last analysis, we had talked about how sustained weakness below the 200-week CMA here, the blue line, was hard. This was actually validated, let's say, since after the 2022 lows, the commodity quickly moved on to this 3-day relief rally that we talked about. It now tries to take out this critical area here at 1711.90 region. We are cautious about daily closes above this level, but successful effort can open the door towards 0.7 to 85 region around here. Now, on the other hand, as long as it stays below this critical resistances here, there is scope for further pressure. And the Fed was hawkish, which could weigh. And the situation around China and COVID-19 reopening is quite messy, so this also can be a drag for now. So we can see renewed pressure towards the 200-week CMA, but sustained weakness below these levels and below 70 per barrel are still difficult, in my opinion, as things stand now. And we're already 4 minutes into the US session, so let's go and round things up with a look in Wall Street and in the tech-heavy NAS 100. Now, it is weighed, the index is weighed by the Fed, and we can see that it breaches under and the EMA 200, the 200-period EMA were for our chart, and into the daily smoke cloud. This creates pressure for further weakness towards the 11,213, 11,080 region. This would be around here, but we believe that a new catalyst will be required for further decline that would put the 2022 two-year lows in the spotlight around 10,437. Now, despite the Fed hawkishness, Wall Street seems to be a bit unconvinced that it will actually hike rates by as much as the updated projections suggest. And as such, we can see an effort to reclaim the 12K mark here. But as things are now and advance towards and past 12,468 is a bit difficult again as things stand now. So that's pretty much it. Again, cautious is needed since we had these big events, highly consequential, and that will set the narrative for the new year as well. And on the European side, let's see if we have anything new from President Lagarde. And okay, I don't see anything standing out. Now, as we said, this is the last session, US webinar live session for the year, and we will return on January 10. For the rest of the calendar, things are pretty light. We expect UK retail sales and the series of PMIs, where Eurozone November CPI is due on Friday. Preliminary was plus 10%, but October final was 10.6%. We said that the ECB upgraded its forecast for the CPI inflation, and so that's pretty much it. Given the holiday season, the upcoming holiday season, caution is needed on liquidity condition, holiday hours, and rollover adjustments. That's it for me. Thank you for attending, and we'll be back on January 10th. Thank you.